Hey everyone, artificial intelligence is unquestionably the hottest investing trend in 2023, but will it continue in 2024? Well, all estimates suggest that the industry spending will increase in 2024, but we don't know if the stock price increases will follow suit. Still, if you're an investor looking to capitalize on AI stocks, this video is right for you. I'm going to answer which one I think is the better AI stock, Tesla or Nvidia. I'm going to compare the two on some critically important financial metrics as well as valuation to determine which one I think is the better AI stock to buy now.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
That said, the first metric I'm going to compare these two on is trailing 12-month revenue. And you could see around 2016 or 17, they were neck and neck in terms of revenue for trailing 12 month. And since that point, Tesla has exploded higher and taken the lead in terms of trailing 12-month revenue, generating 95.9 billion in the most recent trailing 12 months, while Nvidia is now at less than half of that pace of 44.87 billion. However, that being said, Nvidia actually generated more cash flow from operations than Tesla. More cash flow on less than half the revenue. Nvidia generated 18.8 billion in cash flow from operations in the trailing 12 months, while Tesla generated 12.16 billion. As Tesla grows, its need for cash is only going to increase because it's a capital intensive business. It's very expensive to build these manufacturing facilities, and it costs money to build the inventory. And the harder it is to sell these cars, which 2023 has proven EV demand has slowed, the harder it's going to be for Tesla to turn over those inventories and generate cash flow. Nvidia, meanwhile, seems to be selling its chips before it even makes them. Demand for its chips are soaring due to the rising effectiveness of AI. Interestingly, Tesla is one of Nvidia's customers. Tesla is using Nvidia's chips to develop driverless car technology. If Tesla can progress in that feat, that would deliver phenomenal growth for Tesla in developing a driverless car fleet, and it could open up possibilities like having a taxi fleet of driverless Teslas running around, picking up people, dropping them off, and earning revenue by offering those rides. And that could be a huge boost to Tesla long term. However, that seems to be several years away, and 2024 could be a year where Tesla makes progress on that front, but it's unlikely to hit that inflection point to become fully self-driving. The other thing I wanted to compare these two on is total employee count. I want to see how efficient the company is, how much profitability and cash flow can they generate. And interestingly, Tesla has nearly 5 times the employees of Nvidia at 127,000 compared to 26,000 for Nvidia. So far, what we're seeing is Nvidia is better at generating cash flow with fewer revenue and fewer employees. The business is more profitable, it's more lucrative, it takes less people, it takes less revenue to generate as much cash as Tesla. I can show you that chart again with Nvidia generating more cash than Tesla, although it's been going back and forth with the two. Nvidia for the longer term has been better at generating cash flow from operations. Tesla took a brief lead in the moments after the pandemic, and now Nvidia has reclaimed that lead. Tesla and Nvidia have been good at demonstrating economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from 100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. That being said, we can see that Nvidia has been significantly better than Tesla with 45.94% operating profit margin compared to its starting point of around 30% operating profit margin around 2019. Tesla as well has demonstrated economies in scale, growing to 11.22% operating profit margin while starting at a negative operating profit margin around 2019. The trends are in opposite directions, though, with Tesla moving downward in operating profit margin, Nvidia moving upward. The reason Tesla is moving downward is because rising competition is really hurting Tesla, and the macroeconomic environment with rising interest rates is also hurting Tesla. So it had to cut prices, or it chose to cut prices to sell more cars, and that's hurting Tesla's profit margins in the near term, while Nvidia is benefiting from its lead in artificial intelligence technology. Its competitors are at least one step behind it, arguably more than 2 steps behind Nvidia, and so it's benefiting from that advantage. The next thing I wanted to look at is their cash balance, their balance sheet. And in this metric, Tesla is more than 3 times better at 15.9 billion in cash and equivalents in the balance sheet, while Nvidia has 5.5 billion. Similarly, with long-term debt, Tesla is in a better position with just 3.7 billion in long-term debt, and Nvidia has 9.7 billion in long-term debt. So the balance sheet for Tesla is much better than the balance sheet for Nvidia. But let's look at what investors expect from these two over the next couple of years. For Nvidia, investors expect revenue growth of 56% in 2024 with earnings per share growth of 66%. Phenomenal growth, to be sure, and that to continue in 2025, although less strongly at 17.5% revenue growth with 15.9% earnings per share growth. For Tesla, investors expect 20% revenue growth in 2024 with 21% earnings per share growth in 2024 and similar rates in 2025 with 22% revenue growth and 30% earnings per share growth. So for the next couple of years, Nvidia's prospects look better than Tesla's prospects. Now let's consider these two and their price. And what I use to measure price in this case is the forward price to earnings ratio. And looking at this metric, Tesla is trading significantly more expensively at a forward price to earnings of 61.99, while Nvidia is trading at a forward price to earnings of 24.41. And we saw earlier that Nvidia was better in terms of generating cash flow from fewer revenue, fewer employees, better operating profit margin, and it has better prospects over the next couple of years. Tesla, meanwhile, had the better balance sheet. So if I was to choose, I think Nvidia's advantages outweigh Tesla's advantages, and Nvidia is trading at a much cheaper valuation. So for me, the better stock to buy, the better AI stock to buy is Nvidia. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.